Imagine you started with £10,000 in your investment account. After 10 years, would you rather see a balance of £25,000 or £22,000? That £3,000 difference isn't down to some secret stock tips or insider knowledge, but rather the fees you're paying on your investment platform. Many people are shelling out hundreds of pounds more than they need to each year without even realising it, all because they've stuck with an investment platform that's not the best fit for them. By the end of this video, you'll know exactly which investment platform, Vanguard or Hargreaves Lansdown, suits your needs best. We'll compare their account options, fees, and ease of use, so you can make a smart decision and potentially save thousands in the long run. Most people get tripped up by hidden fees, and it's something that can make a massive dent in your returns over time. In the UK, where every pound counts more than ever given the current cost of living crisis, paying an extra 0.5% or 1% in fees annually can significantly impact the growth of your investments. Many folks choose a platform based on brand recognition or a friend's recommendation, but often miss the small print buried in layers of jargon that tell you what you're really paying. The truth is, those costs can quietly snip away at your nest egg, and by the time you notice, it's too late to reverse the damage. That's why taking a close look at fees before you commit to an investment platform is crucial. Let's start with account options. Vanguard is known for its straightforward offerings, focusing on index funds and ETFs. You can open a stocks and shares ISA with them, or stick to a general investment account. It's all very no-nonsense, ideal if you're looking to keep things simple. Suppose you're investing £20,000 into a stocks and shares ISA. With Vanguard, you might pay around 0.15% in platform fees per year, which works out to just £30. Hargreaves Lansdown, on the other hand, offers a wide variety of investment options, from funds and shares to bonds and more. This is great if you're someone who likes to have a smorgasbord of choices at your fingertips. For that same £20,000 in an ISA, you might be looking at fee structures closer to 0.45%, adding up to £90 per year. That's 3 times what you'd pay with Vanguard. So consider how much you value having a multitude of options versus sticking with a more straightforward avenue. Now, let's talk about ease of use. Vanguard is built around simplicity. The platform is clean, minimalistic, and perfect for DIY investors who just want to get their money in without any fuss. You're not bombarded with bells and whistles, which might appeal if you prefer a set-it-and-forget-it approach. Hargreaves Lansdown, however, has a more classic interface with a ton of data at your fingertips. News, analysis, research tools, the lot. It's a platform that demands a bit more of your attention, but offers depth if you're the type to dig into your investments regularly. So, if you're deciding between these two platforms, let's dive into accessibility and customer service, because these are things that really matter when you're managing your hard-earned cash. First, accessibility. Vanguard's mobile app and website are designed for the investor who values simplicity and efficiency. You won't find yourself lost in a maze of options or overwhelmed with information. Many users appreciate how intuitive it is, particularly if you're making straightforward investments and don't need to constantly monitor every market movement. However, if you're someone who's on the go and constantly checking in on your investments, you might find Hargreaves Lansdown's offerings a bit more appealing. Their app is robust, providing access to heaps of data and features, like the ability to track performance, read up on financial news, and even set price alerts. For the active investor who likes to tinker and tweak their portfolio, this level of detail can be very beneficial. Now, let's talk customer service. Vanguard offers solid support through online FAQs and a helpline that's known for its efficiency. But the trade-off for low fees sometimes means less personal interaction. If you're comfortable navigating things on your own, this can be perfectly adequate. In contrast, Hargreaves Lansdown is pretty renowned for its customer service. They've got UK-based support you can get hold of 6 days a week, and interactive help that's top-notch. For many folks, especially those new to investing or who like having a bit of hand-holding, this level of support can be a real comfort. Moving on to another key area, investment tools and resources. Vanguard keeps it simple with its offerings, mostly focusing on the basics. There are educational resources and calculators that can help you understand your potential returns and risks, which is perfect if you're starting out or looking for a set-and-forget strategy. Hargreaves Lansdown goes much further in this department. They provide comprehensive research tools, in-depth articles and podcasts, which are a real treasure trove if you enjoy educating yourself about market trends and investment strategies. Their newsletters and insights can give you an advantage if you're actively trying to optimize your investments. To sum it up, when deciding between Vanguard and Hargreaves Lansdown, consider what aligns more with your investing style. Is it simplicity and low fees that attract you, or do you prefer having detailed insights and support at your disposal? When we think about the flexibility of each platform, this also comes into play. Vanguard's approach is direct and doesn't offer as much in the way of individual stocks or niche markets. But if those aren't your priority, you're getting a straightforward path with low expenses that can help grow your pot over time. With Hargreaves Lansdown, the flexibility is brilliant for those who fancy dipping their toes into different types of investments, from shares to complex financial products, or if you're someone who loves exploring a wide range of funds and investment types. Let's take a quick look at trading costs. Vanguard's flat fee structure is appealing for set-and-forget investors, with low trading fees on buying and selling funds. If you're just making a handful of trades each year, this could mean you're only paying £7.50 per trade. Hargreaves Lansdown, however, charges about £11.95 per equity trade. So, if you're actively trading, these costs can add up quickly, which is worth considering depending on how often you plan to switch things around. Take Ben, a 42-year-old teacher from Manchester. Ben started his investment journey with Hargreaves Lansdown, drawn in by the variety of options. At first, the ability to track specific stocks and read up on all the latest market research felt invaluable. However, over time, Ben realised he was paying nearly £200 annually in fees while only investing around £15,000. Feeling the pinch, Ben decided to switch to Vanguard, opting for a simple stocks and shares ISA focused on a few index funds. His annual fees dropped to just £60, allowing his investments to grow without the constant fee drag. Ben found that, for his needs, the simplicity and cost-effectiveness of Vanguard better complemented his investment style, freeing up more of his budget for family trips rather than feeding fees. Now, let's discuss common mistakes to avoid. First, don't base your choice purely on initial appeal without digging into long-term costs. Many are dazzled by flashy features but end up overpaying in fees. Make sure to calculate those in the context of your investment size. Second, avoid jumping platform because of a few hiccups. Sometimes, an issue with accessing the app or a delay in customer service can tempt you to abandon ship easily. It's important to consider your overall experience and needs rather than reacting to individual incidents. Finally, don't ignore educational resources. Some people skip these assuming they know enough already, but staying informed through articles and seminars can significantly enhance your outcomes and decision-making skills. For your action plan, start by listing what you value most. Is it lower fees, a wider range of investments, or top-notch customer service? Evaluate your current holdings and calculate what you're paying annually in fees. Then, visit both Vanguard and Hargreaves Lansdown's websites to explore their offerings, taking a note of the fees and tools available. Set up demo accounts if possible to get a feel for the interface and ease of use. Schedule a regular checkup on your investments, say every quarter, to ensure the platform still meets your evolving needs. To wrap up, understanding the nuances between Vanguard and Hargreaves Lansdown can make a real difference in your financial outcomes. Consider fees, ease of use, and the level of support you'll get. Think about Ben's story when deciding on what suits your personal style best. Don't forget to subscribe to The Money Move for more insights and catch our next video, where we'll explore top investment strategies for beginners. Thanks for watching, and here's to making smart money decisions together.